Then we had seen the screeners. How do we find out good companies? So these are the three companies which I recommended yesterday. I don't know if you have bought it, but if you see the price, they've already rose by 5%. So you were able to get it for a very low price in the morning, but by evening the price shot up by 5%. Now this is upper circuit. Upper circuit means in a day maximum limit is 5% only. So maybe it will rise by another 5% today also. And so is your Gujarat Containers. This was also locked in upper circuit. So you can expect further rise today. Right. Even this has become from 204 to 207. Now coming on to technical analysis. Technical analysis for investment. So investment in the sense where you are holding the stocks for few months or few years, maybe even 3 to 5 years. So there's a separate technical analysis for that. And then we have technical analysis for intraday short-term trading. We'll be discussing on that as well. Let us first complete the investment part. So the first thing you have to keep a note on is always refer candlesticks. Refer monthly candlestick charts for the investment. And what is candlestick also we'll be discussing shortly. Secondly, mark two parallel lines. Okay, this points I think I've already discussed, right? Bungee jumping. Alright, only one line that I've covered. Anyway, write it down. Quickly note down all the points. Right, so these are the 6 points very important for technical analysis on investment. We are very clear with the screeners what stocks we have to deal with. And next is the question, when do we time it? When do we enter? When do we exit? So you will have to look at the candlestick charts of monthly time frame. I'll be showing you that. And there you'll be seeing lot of series of candles with green color and red color. Color is not important here. What is important is to mark the zones. When you clearly look at the pattern, you should be able to draw two parallel lines at the bottom and at the top of the prevailing share price. That bottom price is nothing but the demand zone, wherein we would attempt to buy the stock if the price comes there. It may come, may not come. If it comes, we will buy, otherwise we'll leave it like that. And after purchase, in case the price further falls down, it means that the stock is pretty weak, it is not respecting the demand zone, we exit in loss. If the price pierces the two parallel lines, lower line, and closes them, if it crosses the line and again it recovers by end of the day, then no problem. But if it closes below that line, there is no other option for us but to forget and accept the loss. We'll recover the profit some other stock. But in case the price touches the demand zone and then starts rising, then we wait all the way till the supply zone parallel lines. So as the price enters into the supply zone, we keep on exiting the stock partially by partially. And that whatever the money that you have got post exit, whether it is stop loss or whether it is the profit, you are going to do the same process for the next stock. There will be more than 100 stocks for you to trade. Every day some of the other stock will give you buy opportunity. Every day some of the other stock will give you the sell opportunity. So just follow these rules religiously, that is all. Clear? And now understanding what these candles are. Line charts is very simple to understand. It's just nothing but the connecting dots of the closing prices. But what is so special about candlestick that the entire world is fond of? Every good analyst trades on candlestick charts. Basics of candlestick charts. The candles are represented by green and red color, where green denotes strength during the time frame right now. Alright, so basics of candlestick charts. You are going to find these candles in two colors, red and green. So red denotes weakness, selling pressure on the candle, while green denotes strength, buying pressure on the candle. Let us quickly have through the color. But how exactly do we know that it is strength or it is weakness? That also we will know. Just give some time. We'll be discussing about the markings of the candle. See the series of green color and red color candles clearly visible. Likewise, we have it even in black and white charts. This is black and white. Same thing. Rather than red color, they put it as dark color. Okay. Then different people have different color combinations. But the standard colors are black and white or red and green. Like this. Okay, this is bar chart. Candlestick and bar chart are almost the same, only difference is your candles are narrow lines in bar chart, otherwise these are proper candles. Now understanding the basics of candles. Firstly, how is it decided that it is red color or green color, or whether it is dark color or white color? I want you to draw these candles. Okay, so quickly draw this and shade this one dark and do the marking. Markings are very important. 5 minutes of time, quickly do it. Okay, so there are four elements in any candlestick. There are four data points by which a candle can get formed. What is that? Open, high, low, close. That is why, if you remember, I told you it is also called as OHLC chart. Open, high, low, close charts. So whenever a stock, let's say Gujarat Containers, it opened at 170. After opening, it went down 165. Then it went high to 190. Then finally closed at 185. So the open is lower price, though it went further low. Then by later half of the market, it went very sharply higher, but then reacted slightly and closed here. That means from here, the price moved till here during the day. Why? Because of buying pressure. When the demand is more than the supply, then only the price rises. That's why this is green in color. Hope you have got the point. Coming to bearish, exactly opposite. The price opened at 180. Then it went higher also in the first part of the day. So it may have gone till 185 because of buying pressure. But then the selling pressure dominated. Price went down till 165. Little bit of buying pressure came because it had fallen a lot, and finally then it closed it at 170. So it opened at 180 but closed at 170 because of the more supply than the demand. The price has been falling down. That's why this is called as bearish. Bearish means weakness. Bullish means strength. So these two lines what you see, these are called as shadows. Lower shadow, upper shadow. You can also call this as wick, WICK. That is what we say for the candles that we use on day-to-day basis. Upper part is the wick, lower part is the tail. So upper shadow also called as wick, lower shadow also called as tail. If you want, you can note down that points. And then this central part is called as a body part. Central part is called as a body part. Now there may be some candles wherein you will not be finding the shadows. Such candle, now you should know some, only on candlestick there are n number of patterns and n number of names are given to it. That's why it's called as encyclopedia. Thousands of terminologies are given for each of the chart combination of candlestick. But the ones which are the most important for us and which has got high success ratio, only that we are going to discuss. Now my question is, at times in the candlestick, you may not find this lower line. There will be only like this. Only wick will be there, there will not be any tail. What does that denote? What it denotes is that open and low both are same. Open and low both are same. That's why the shadow will be missing, which is also called as inverted hammer. Called as inverted hammer. These names you will understand now. And there could be some candlestick where this part is missing. It will be like an ice cream. You won't find the upper shadow. So what does that mean? The price opened at some point, there was weakness persisting during the day, but by the close, it closed at the highest point. What does that signify? That means the buyer has not finished his job. It is likely that tomorrow it will open stronger because it is closing at the highest point for the day. So like that kind of signals you need to get. It doesn't guarantee mean that it will open higher. Chances, probability. The candlestick is at least staying there. You have to be right only 60% of the time. Remember this. So let's say the price is coming in the demand zone, and suddenly you find an ice cream pattern, also called as hammer pattern. Then you'll have the confidence to enter it. It is likely to be the reversal. Maybe the worst is over. Maybe the selling pressure is ended now. Alright. So let us see what are the important chart patterns. First one, give the headline as Marubozu. These are all Japanese names because candlestick was started by this Japanese. Marubozu candlestick. So let us directly check the image itself. Neither there will be upper shadow nor there will be lower shadow. So kindly draw these candlesticks with no shadows. This is an amazing, a very rare pattern to find, but an amazing success rate. The stock opened at the lowest point. The stock opened, let's say Gujarat container, it opened at 172 rupees. That itself was the low. During the day, it continuously rose, and it closed at the highest ever point. So, opening at the lowest point and closing at the highest point, it means that the stock has got immense strength. It cannot have strength more than this. This is an extreme strength pattern, guys. It's called as extreme strength pattern, extreme weakness pattern. The stock opened at 100, which itself is the high, and then it closed to the lowest point for the day. That means the seller has not finished the job. At every point, he wants to sell, sell, sell. Stock cannot get weaker than this. Stock cannot get strength than this. This is the extreme pattern. Quickly note down. And these points are also important. Write down this as well. Volume has to support whatsoever. Alright, so this is one pattern, Marubozu, like. Then we have hammer pattern. Hammer patterns are also powerful. The next strength pattern is hammer. So draw the patterns for hammer. These are both are bullish hammer pattern. Color doesn't matter for hammer.
Uh, S- Sanjay,
Yes.
may I ask one question, please?
Sure, sure. Why not, Amit?
Okay. This closing price, why, like, it is a closing price, this is an opening price. So that means uh, prior to the opening price, the volume is being built up, like this shadow.
The shadow is
How
not
do
volume.
we come to this, like, this kind of a, like, I can't say map, but design? Yeah.
Huh.
Like how this would be formed, like both green one and the red one.
An
I
example.
understand these are bullish, but how that would be formed? Like initially opening price means morning, suppose
Huh.
morning 9 o'clock,
Hmm.
it is opening, 3 o'clock it's closing.
Yeah.
But this tail, how that shadow would be forming?
Okay. Let's say that market starts at 9 o'clock at 100 rupees. One stock has started. Opening price is 100. After 1 hour, because of some bad news in the television channel, breaking news, let's say Vodafone Idea is going for bankruptcy. 100 rupees stock goes down to 90 because of that interim news for the day. But that effect is there only for 1 2 hours. In the afternoon, all the news gets digested by the exchange, and then the price again starts moving higher, 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 goes back to the opening price. From there, it crosses and then touches and closes at the highest point. A 110 rupee stock, because of bad news in the interim, goes down to 90, but then recovers. Maybe some good news has come later in the half of the day and closes at 110. So whatever that weakness was there, this was already digested by the market. That weakness was there maybe only for 1 hour, 2 hours, 3 hours, 4 hours. But on a day basis, when you see, all that weakness got over and turned to strength level.
Yeah,
Got the point?
yeah, yeah.
Ah.
And similarly for the red one, suppose a bad news come,
Yeah,
and
even for red news, let's say the bad news has come. That means the bad news was not during the market, it was before the market opened. Let's say that right now market did not open, but suddenly breaking news comes, Russia has attacked Poland. Okay, so everybody is ready with their sell. Everybody is ready with their sell, that as soon as the market opens we have to sell the stock. So let's say index Nifty opens at 18,000, and because of extreme selling pressure, because of the bad news, even before market started, it went down till 17,500. But then later a clarification comes by Russia that that missile was sent by mistake. They did not attack Poland. It was a big mistake. Then it starts recovering. And then if you see from the opening, though we are lower to the close, but we have recovered with such a big margin. So this is also considered to be strength because of the huge recovery. That bad news got digested. Alright.
So,
In
so
both
it
these
is,
candles, there has been a bad news. It may be during the market, it may be before the market, but what is important is that the worst of that news is already over. Market has digested that bad news.
yeah, got it.
Yeah.
Thank you.
Same kind of chart patterns you would have seen on Nifty during COVID time, when that was extreme panic. You would see the same kind of candle even on Vodafone Idea when that breaking news of bankruptcy had come. So generally these hammer patterns are formed because of news only. You can note down this point as well. These patterns are generally formed on breaking news. There may be some stocks wherein you will not find body at all. It will be like a plus sign. Plus. So cross or plus, these kind of patterns are called as doji patterns. What do they signify? That also we'll understand. And before that, one more chart pattern important, engulfing. Bullish engulfing, bearish engulfing. That is a double candle pattern. That means 2-day pattern. Firstly, write down bullish engulfing and draw this. Okay, so that's your bullish engulfing, wherein this is previous day candle, this is current day candle if you are considering the daily candlestick pattern. So previous day the stock was actually bearish. Now why it was bearish? Maybe the overall market was bearish, or maybe there was some bad news. So whatsoever, there was selling pressure in the stock that was experienced because of the red color that we see. But immediately in the next day, things changed overnight and the stock had got lot of strength as such that the body of this particular candle covers this entire candle along with the wick and shadow. That is called as bullish engulfing. Remember, we had learnt in our school days, amoeba engulfs the food. So it changes its shape and it covers the entire food with its body and then it takes it. That is how even this engulfing is. If you look at from the right side, this candle should not be visible at all. Then only we would say that is an engulfing pattern. But very important, do not directly attempt a trade because it has got an engulfing or it has got an hammer or it has got an inverted hammer. No, please don't do that mistake. You are only going to buy when along with this candlestick something else is also matching. So this only has to be taken as a context. There has to be something being built up, and over that you see this pattern, then you have a context, we can attempt a trade. But only purely on the basis of this pattern getting formed, then it is very, very difficult to get success. Then machines would have taken the trade. People were not required at all. You can write a code in algo, bullish engulfing buy, bearish engulfing sell. No, that's not the way. We have to look at other conditions as well. Yeah, this thing matches, this thing matches, this is also getting formed, then the confidence will build up. The chances of getting a success on the trade improves. Like you have the bullish engulfing, we have got the bearish engulfing also. Exactly opposite. This is a perfect bearish candle, but along with the markings, this is not a perfect bearish engulfing because the body should cover even the wick. This is a, okay. Note down this one, bearish engulfing. Alright, so that's your bearish engulfing. Exactly opposite. The stock had bit of strength, but immediately next day, maybe that example to say, Reliance is going to come out with the results tomorrow. Reliance is going to come out with the results tomorrow. People are expecting the results to be good. Everyone wants to be first, right? So the stock had good strength even before the result, but the result did not meet the expectations. Immediately, that strength turned to huge weakness. Clear? So that's your bearish engulfing. Then inverted hammer. Inverted hammer candlestick. Please write down. Both of them signify weakness. Okay. Both these candles signify weakness, just like both the hammer candles signify strength. Both of these candles signifies weakness. In the hammer pattern, the entire bad news gets digested. Here, the entire good news gets digested. That's why the price is lower. It will be very difficult for the price to cross this line in the coming days or in the coming time frame. Okay, so that's your inverted hammer. And then finally the dojis. There are several dojis. Write down headline as doji and draw all these 4 patterns. Alright, now doji patterns signify indecisiveness. Write down. So by looking at a doji, we cannot be sure whether it is going to be bullish or bearish. What very important point right now, guys. Very important note here. So whenever you see series of doji patterns coming for once, twice, thrice, four, five, like that doji candles you find back to back, then be mentally prepared that something big is going to come. Now whether it is going to be on the upside or downside, we may have to look at other things, but something big is for sure going to come. A big candle will get formed. It may be Maru Bozu, it may be hammer, something big is going to come. Either it will be like a 200 300 point move on the index, if we are referring to index, 200 300 point in a single day on index can be expected. So accordingly we can create some hedging strategies by looking at this data. All right. Okay, so that is it. Let us quickly see how does a monthly candlestick looks like. Then tomorrow we'll be taking up from there. So the best site for reading the charts is chartinc.com. You don't require any other charts. So here, in order to select the time frame, let's take one particular stock, Reliance. So here we have selected the time period. So let's say all data. That means historical since several years back. Here we can choose monthly. When we choose monthly here, it means that every candle represents a month. Start of the month, during the month, end of the month. With this three data, a candle will get formed. Each candle will represent a movement that happened for a month. See here, this is how the stock price has been moving over several years from 2003. Let me zoom this a bit by changing here to only 5 years. See here. So every candle is 1 month movement. When you put your mouse over the candle, you can see here at the top what is the open, high, low, close. 1st February 2021, open price, high price, low price, close price. Okay. So what has been the change? 13%. Not for the day, from 1st February to end of February, 28th or 29th, whatever. 28th of February. Alright. So here we do not have any kind of Marubozu pattern, but see, this is more or less like a Marubozu. Can you see here? So what happened immediately? The price rose further. So 1 month that a Marubozu got formed, immediately in the next month we have got a change of 5%. So we could have created a call spread or something like that. Okay. Remember this doji, I told you doji. Immediately after doji, a big movement can be expected. But whether it is going to be on the up or down, that we are not sure. These three are also kind of doji. Okay, plus kind of thing. The shadows are much bigger than the body. That's what is called as a doji. Doji need not be exactly plus. So what happened here? Immediately we saw a very big movement. How much percentage change here? 11%, another 6%. 16% movement we could see after back-to-back 3 dojis. Now this is what? Gravestone. Inverted hammer gravestone pattern. Or we can say doji also, because the body is very less. And immediately after that, a big movement had come. A fall of 5%, a fall of another 2%, 7% fall. There have been cases wherein the pattern even got, see, this is hammer. Okay, a perfect hammer. Hammer color doesn't matter. In hammer, the color doesn't matter. Hammer means bullish. Inverted hammer. Can you see inverted hammer? Inverted hammer. Back to back falls, because inverted hammer is bearish. Price fell down further. But here, ice cream pattern. Price reverse chance. Look at that movement what we got. How much? 31% in a single month, guys. A perfect hedging strategy if you would have done, amazing return you would have got over 6 months. So this is 31%, then flattish, doji, then again a big movement, okay? 16%, 50%, 70, 80%, 85%. If you compound it, it is like double the return in just 6 months, just by looking at basic candlestick pattern. That's all. In a stock like Reliance, that too, which means a lot. So this again your bullish hammer kind of pattern. Okay, bullish hammer, and then we have seen a big rise of around 8%. So like that, today the homework for you is on your favorite stock in charting.com or monthly time frame of 5 years or 10 years, whatever that you take, right from the start of the candle till the last, whatever candlestick patterns we have seen, bullish, engulfing, Marubozu and all that, just mark it, mark the entry after Marubozu if you would have taken a trade on the next candle. So how much returns you would have got, whether it is positive or negative. Okay, any 1-2 of your favorite stocks, kindly do that. Maybe some 40-50 trades you would get. Let us see, just on the basis of the basic candlestick pattern, whether you would make profit, and if yes, what extent of profit you could expect. That is all for today. For any questions or doubts, make use of the chat window or the audio control.
Sanjay, can we make